our response has been, in some dimensions, not up to the task. In other dimensions, impressive. The dollar amount, over $2 trillion, is obviously impressive. But in the response, in terms of what Mr. Buller emphasized, tests, we're way behind the ball in developing the tools to enable our doctors to deal with it, the masks, the protective gear, the ventilators. We're way behind. One of the interesting things that came out today, the IMF came out with its World Economic Outlook, which was a disastrous view where the global economy looks like it's going. One of the things that's very distinctive about the United States relative to the change in GDP is how bad our unemployment numbers are. Other countries, UK, Denmark, have managed their way through an economic downturn as deep as the United States without anything like the kinds of unemployment numbers, soaring unemployment, that we are confronting right now.
Yeah, I actually wanted to ask you about this point because your work and a lot of your recent work has been done on the topic of inequality. A lot of those job losses that we saw last month and that we continue to see are concentrated in areas like leisure and hospitality and restaurants where the wages are below that of the average American. And I'm wondering, already we're seeing this crisis exposing a lot of the inequality that we have in our society, just how much worse it could get.
Yeah, exposing it in several dimensions. The coronavirus is particularly nasty to people who have pre-existing conditions, diabetes, poor health in any way. And America is distinguished in having more health inequality than any of the other advanced countries. So as bad as our income inequality is, health inequality is even worse. And the pandemic is really exposing how bad it is. And what's so striking is that these are often people who are serving us every day, who are delivering, even nurses in the hospital who are very low paid. They're the people that we depend on, and yet we don't pay them very well, and we don't treat them very well.
So Professor, are there going to be threats to capitalism when we come out the other side of this? I mean, how should bailouts, if they arrive, how should they be shaped to minimize the long-term threats to capitalism that could arise?
Well, in the 2000 crisis, I talked a lot about what I call air socks capitalism, where the corporations, the banks got the upside and the taxpayers got the downside. There's a little bit of that here in the sense that many of the corporations that are getting help got an enormous tax break in December of 2017. And instead of putting that money away for a rainy day to create a capital buffer that would enable them to be more resilient, to respond to a crisis such as the one we're having, what they did is they paid their CEOs enormous salaries, and with the rest of the money, they bought back shares, almost $1 trillion in 2018 alone. It's hard for me to feel very charitable towards these companies, and yet now they're getting enormous help from the government, even though some of them didn't even pay taxes in some recent years. I think it is imperative that the government take a significant upside, you might say warrants or some way of getting the upside as the economy recovers, so that they just don't get the downside they're now experiencing.
Well, we could have this discussion for an entire hour, and it's been a hot topic on CNBC, Joseph Stiglitz, but we've got to leave it there for now. We will have you back shortly. Thank you for joining us.